Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is our good friend Peter Boockvar. He is the Chief Investment Officer with Bleakley Financial Group. Welcome back, sir.
Thanks for having me again.
Yeah, it's always a huge pleasure having you back on Wall Street Silver. I wanted to have you on to talk about everything that's going on in the stock market, Federal Reserve, see what Powell's doing, and of course, silver and gold. But what the heck is going on in the world, Peter? It does seem we're on the verge of either a brink of a major stock collapse or either a regional bank that will go under. What are you watching right now? What are you concerned about?
Well, it's a pretty broad question. I'm watching the rise in long-term interest rates, as I think that has taken many by surprise. There was a belief that inflation's moderating, Fed's just about done raising short-term interest rates. Therefore, the rate story is in the past, and then we've seen this very sharp rise in long-term rates over the past month. That's what's most interesting to me right now because it's happening while the global economy continues to see pretty anemic growth. I mean, the German 10-year Bund yield is not rising because the German economy is robust. In fact, the economy is contracting. To use that as an example, the U.S. 10-year yield is not rising because we're all seeing this acceleration in growth. It's happening for a variety of other reasons, like the BOJ widening yield curve control, possibly getting out of negative interest rates by year end or early next year.
Right.
Treasury supply overwhelming the buyers, and so on and so on. But to me, that is most noteworthy here.
And I seen a post on Reddit and Twitter talking about the 2-year treasury for the US dollar, and it spiked up in the past day or two quite a bit. What's concerning you right there, Peter?
Well, the short end's just going to follow what the Fed does. So
Right.
we're trading above and below 5%. Today we're 506 ish. So it's on the higher end, but the short-term interest rate is not going to get away from us as assuming the Fed's just about done raising interest rates, which we'll obviously see through the end of the year. I think they're pretty much done, but I've said that before, so I've not been correct on how aggressive they would be. But I think whether they hike or not again is irrelevant. It's how tight they will be and for how long that'll be the case.
And what do you think will happen with silver and gold and in the precious metals space? If he pauses, or what you said it was whether it happens, if they pause or they don't pause, what do you think would happen to silver and gold?
Well, certainly if the market believes that they're done, we should see an increase in pricing. The amazing thing about gold is how well it has traded in the face of the very sharp rise in real rates. We know the two main sort of swing factors that influence the price of gold is the direction of the dollar and real rates. And real rates, I mean, if you take a step back and you look at over the last couple of years, real rates are up dramatically, and gold is higher as well. So that tells me that there's a underlying bid to gold, whether it's from central banks or mostly the Eastern world, more so than the Western world, that if the market sniffs out the Fed being done, which I think they pretty much are, and we get some dollar weakness from that, you could see a nice acceleration in gold and silver prices from here.
And people, we've been watching for the past week the price of oil go up quite a bit, and that's been a huge concerning point, talking about inflation globally. What are you seeing with oil markets? Are you keeping an eye on that?
Very closely, since we're long oil stocks
Yeah.
and natural gas stocks. We have been for the last couple of years. And I think this is also noteworthy because it definitely complicates the Fed's inflation fight. They may look at core, but higher oil prices have sustained filters into a lot of core things.
Hmm.
So that is a major factor. And it's happening also with, as I said, global economy being somewhat anemic in terms of growth. And I think that a lot of this rise in oil prices is, yes, demand actually that's holding in, proving the inelasticity of oil prices, but
Hmm.
also a lot of discipline on the supply side, particularly from OPEC, that is leading to this further rise.
Yeah. And a lot of people online, and even I've been seeing some TikToks talking about comparing the Great Depression in 1930 to comparing it to now. They're saying it's like a silent depression that we're currently in because of cost of living and just cost of everything, even real estate. If it all continues to skyrocket, even the price of inflation, what does that do to the cost of everything we buy, and what happens to the future, like to the US dollar? You said if the Fed does pause and the US dollar does take a little bit of a hit, like what would happen to the cost of everything that we buy?
Well, if the dollar falls notably from here, that will just exaggerate also the inflation pressures. It reduces the purchasing power of one's wallet. And
Right.
not only that, but it also makes things more expensive to import. So, I mentioned that higher oil prices are complicating the Fed's job. If you saw notable weakness in the dollar, that would further that complication for sure.
And the BRICS nation, they've just decided in the past month or two to add six more countries onto their list next year, and Saudi Arabia is included one of them. Do you think that's going to have any effect on the U.S. dollar, the U.S. petrodollar, or is that just something they're just talking about now, but it won't take any effect until the long term? What do you see with the BRICS nations?
Well, with more countries paying for their energy needs in non-dollar currencies, that has, I believe, a major impact on the petrodollar.
Hmm.
Now, it's not something that plays out immediately. It's going to be more evolutionary over time, but it is something that can't be ignored. And we know the petrodollar since the 70s has become so embedded in terms of using it as a transaction vehicle, and using less of it, I think is pretty noteworthy. And the dollar's still going to be the reserve currency for a while, but it's getting chipped away, and likely will so more as time progresses from here. Particularly when, as I said, you have more countries that are satisfying their energy needs without having to use dollars. It makes it much easier for them to do this because they have their own printing press, and as long as the seller of barrels of oil will accept that currency, it definitely is a game changing scenario.
Yeah, absolutely. You nailed it. And Peter, U.S. credit card balances exceeded $1 trillion this year. Simultaneously, for the first time in history, over 50% of credit card balances are being carried over from month to month. So there's lots of pressure on households and just everyday people trying to get by. If the Fed continues to raise rates, or if they pause, what will break first, do you think? Do you think the stock market or a regional bank, a big regional bank will go first? What do you think will get hit first? Which market or which sector?
Well, with credit card debt, it's not, you need to look at it not in absolute dollars. You have to look at it as a percent of the economy. You have
Mm,
to look at it as a percent of disposable income.
mm,
So it is down a lot from where it was, even though in terms of the last 15 years, but it's elevated from where it was prior to that. So it's important to have context when you say $1 trillion, because the economy is 26 trillion now. In terms of what breaks, I'm not as worried about banks breaking. I think that was a 2007, 2008 story. Maybe there'll be some more bankruptcies, and there's definitely going to be some stress in certain banks that are over levered in terms of their exposure to commercial real estate, and you're losing deposits. But I'm more worried about a death by 1,000 cuts economic situation as the time progresses from here, and more companies get sort of caught in the netting of higher interest rates, and what that means for not only their own balance sheet, but also future business activity that will slow in a very credit sensitive economy that has been driven more by credit cycles over the past couple of decades, rather than normal economic cycles that were more driven by savings and inventory adjustments that we saw before Greenspan showed up.
mm-hmm. And of course, you absolutely nailed it when you said, "Will you death by 1,000 swords?"
Cuts,
Death.
swords, cuts.
Yeah. So death by 1,000 cuts, and you look at everything that'll be coming in the future with the debt servicing on the 32 trillion. People said there was estimates that'll be $2 trillion a year within the next like 6 or 9 years. I forgot the estimate, but how crazy is that? Is that even sustainable? How can you keep that up with the debt servicing at 2 trillion a year alone?
Yeah, well, it's rather alarming that it's going to exceed certainly defense spending and
Yeah.
other discretionary spending. And there doesn't seem to be any sort of feeling in Washington that they need to alter this trajectory. I do think part of the rise in longer term interest rates maybe is the initial sign that deficits do finally matter
Hmm.
after really never mattering. I mean, it was the 1980s when people were whining about the U.S. budget deficit going up so much, but it never really mattered. The bond bull market continued on for another 40 years. But
Hmm.
maybe now, because the numbers are getting so large and alarming, that it actually does matter. Now, we've already seen, I think, a rise in long-term interest rates as maybe the first signs, but you need to see a response in the US dollar and weakness there to sort of confirm whether that's a legitimate concern from here or not.
And as the US dollar goes down, if it does, whether the Fed pauses or not, you're going to see, historically, we see gold rise quite a bit once the US dollar is weaker. Do you have any price estimations for gold or silver within the next year, or no?
I have no idea where they go for the next year, but I know they're going much higher from here.
Yeah, makes sense. Well, Peter, it's such a huge pleasure having you come down to Wall Street Silver. As always, where can people contact you? Or we'll put your stuff in the description as well, but where can people find you?
Well, if on one hand, if they're interested in my daily writings, they can check me out on Substack, peterboockvar.substack.com. They can subscribe, and on the wealth management side, they can learn more about us at bleakley.com and reach out if they're interested.
Awesome. And I'll put it in the description for everyone to see as well. But again, thank you so much, Peter, for coming down.
Thanks, Ivan. Appreciate it.